Hi, this is Andrew Jordan with NodeWise, and in this video, we're going to talk about why an SBA loan might actually be better than a traditional loan, even though the interest rate is higher. Now, that sounds a little backwards at first, but let me show you why. Let's say you need $1 million loan. With a conventional loan at 7% interest over 5 years, your monthly payment is about $19,800. With an SBA loan at 9% interest over 10 years, your monthly payment drops to about $12,700. So yes, the SBA loan has a higher interest rate, and yes, over the life of the loan, you'll pay more interest. But from a month-to-month perspective, that difference in monthly payment, roughly $7,000, it's huge. Now, I'd personally rather be done in 5 years than 10, paying off that loan. But if you're a growing MSP, that cash flow difference can make the difference between being able to take opportunities and having to pass them up. Maybe at the start you can't afford nearly $20,000 every month, but $12,700, that might be doable. And if that financing lets you grow, at some point you're making more money and you can start throwing extra toward the loan. One of the big advantages of SBA loans, at least as of now, is that they're usually not come with any prepayment penalties. So you can use the lower payments to buy yourself flexibility at the beginning, and then once you're stronger, accelerate your payoff. You're not locked into 10 years unless you want to be. Another thing you should know, SBA loans often come with additional upfront costs and fees. Things like guarantee fees, packaging fees, closing costs. Now those are usually rolled into the loan, but it does mean that the loan balance you're paying off can actually be a little bit higher than the amount of cash you walk away with. It's not usually a deal breaker, but it's something to be aware of when you're comparing your options. This is how I want you to think about it. Loans are literally renting money. And from the bank's perspective, that's not just like a metaphor, that's exactly what they're in the business of doing, renting you money. And just like with buildings, renting isn't always bad. Financially, buying is sometimes better because you build equity and you save long term, but leasing can make perfect sense. I actually lease my office space. I love the location, it's affordable, and when something breaks, it's not my problem. There's less risk. It's similar with loans. A longer term loan costs more overall, but it lowers your risk and keeps you flexible. And sometimes that flexibility is exactly what your business needs. For MSPs with recurring revenue but lumpy project cost or hiring plans, that flexibility can be critical. Another big piece here, SBA loans are designed so that you don't have to take a ton of collateral to qualify. Traditional banks want two things: proof you can make the monthly payments, and proof that if things go bad, they can still get paid back by liquidating your assets. SBA loans work a little bit differently. The government steps in and says, we'll share some of that risk, which means you can still get a loan without having to have as many assets supporting it. That's not reckless. What's reckless is going with a predatory short-term loan with crazy rates. An SBA loan isn't that. It's a structured tool meant to help you build. So yes, if you can afford the conventional loan, great. But if you can't, the SBA loan might be the tool that gives you room to grow, to expand, and to succeed without being crushed by payments too big for where you are today. Because at the end of the day, remember, you're renting money. And just like leasing a building, sometimes that's exactly the right move.